Hi everyone, welcome back to Corporate Decoder. Today we are diving into the financial world of Chase Packaging Corporation. But be warned, this might be less of a thrilling chase and more of a slow stroll through numbers that don't exactly scream excitement. This report is a look at Chase Packaging for the second quarter of 2025. In short, the company continues to operate without much activity. There's little revenue and expenses are eating away at their cash. But we'll dig into the numbers to see what they really mean for the company's future. If you are excited to learn more about such reports, make sure you are subscribed. We also have a Discord community linked in the description below for more in-depth discussions. First things first, this is a quarterly report, meaning it covers the period from April to June of 2025. The company confirms they filed all required reports, which is a basic but necessary step. As of July 10, 2025, Chase Packaging had about 61.9 million outstanding shares of common stock. This number is important because it is used to calculate earnings per share, a key metric for investors. Let's move on to the financials here. Chase Packaging is providing us with condensed versions of their balance sheets. These are snapshots of what the company owns, assets, and what it owes, liabilities, at a specific point in time, along with the value held by shareholders. Looking at the balance sheets, the total assets were about $253,000 in June of 2025, down from about $298,000 at the end of 2024. This is not a huge sum for a corporation, indicating that the company is operating on a very limited scale. On the liability side, the company has about $3,473 in current liabilities. A relatively small amount. This suggests that Chase Packaging is not burdened by significant short-term debt. The stockholders' equity is where things get more interesting. Common stock is listed at a tiny $6,119, while treasury stock, which is stock the company has bought back, is listed as a negative $49,759 at about $8.8 million, but the accumulated deficit or past losses is a whopping $8.5 million. This all adds up to a total stockholders' equity of about $250,000, a decrease from about $294,000 at the end of the previous year. The deficit significantly eats into the equity, which is something to keep an eye on. Now we will move to the income statement, which reports a company's financial performance over a period of time. It shows revenues, expenses, and profits or losses. For the 3 months ended in June, the company's general and administrative expenses were about $32,000 in 2025 and about $28,000 in 2024. These expenses cover the costs of running the company. The loss from operations, before considering other income, was a little under $30,000 for the quarter in 2025, compared to a loss of a little over $23,000 to the same quarter in 2024. There is also some other income, mostly from interest, to consider. It totaled about $2,600 in income for the quarter in 2025 and about $4,204 and $4,024. The net loss of about $30,000 translates to a loss of $0 per share. Yes, you heard that right. It's so tiny that it rounds down to zero when you calculate it per share for both years. This calculation is based on nearly 62 million shares that are outstanding. This suggests the company has a lot of shares for the limited amount of activity that it has. Next, we will move on to the statement of changes in stockholders' equity. This statement explains how the company's equity changed over the period. Starting with the balance at the end of March of 2025, the company lists about $619 in additional paid-in capital and a deficit of approximately $8.5 million. Adding in the net loss of about $30,000 for the quarter. The ending balance at June of 2025 includes an increased accumulated deficit of about $8.5 million. There weren't really any other changes to things like issued shares impacting the amounts in common stock or treasury stock. Moving on to the cash flow statement, this shows how the company generated and used cash. It's divided into operating, investing, and financing activities. The net loss for the first 6 months of 2025 begins at around negative $44,000. It's adjusted for changes in operating assets and liabilities, but the adjustments are minimal here. The net cash used in operating activities is roughly $44,000 for the first 6 months of 2025. There were no cash flows from investing or financing activities. Ending cash is around $253,000, down from about $298,000 at the beginning of the period. This shows that the company is slowly burning through its cash reserves. Now we can turn to the notes. The first thing to note here is that all these numbers depend on management's estimates. This is normal but important to remember. Actual results could be different. The company considers anything that can quickly be turned into cash within 3 months or less to be cash equivalents. They keep their cash with what management considers to be trustworthy financial institutions. Chase Packaging uses the fair value approach to account for stock-based compensations, if any. The company operates and manages its business as one reportable and operating segment. The Chief Executive Officer reviews all the operating results to make all resource allocation decisions. For calculating the loss per share, the company divides the net loss by the number of shares outstanding. Potential shares from warrants which could dilute the value are ignored as they would have reduced the loss. In 2023, the company amended and extended the expiration date of its warrants. This means they pushed back the date when these warrants could be used to purchase stock. The key thing here is that this extension was valued using financial models, specifically the Black-Scholes model. As of June 30, 2025, there are about 6.9 million warrants outstanding. They have an exercise price of $0.15, meaning you can buy a share of stock. The company has shares of preferred stock, but as of June 30, 2025, none of them have been issued. As of June 30, also outstanding are warrants that relate to more shares of stock, totaling about 68.8 million shares. Again, what these all represent is the theoretical potential of newly issued common shares and thus potentially diluted prices. Fair value represents the price that would be received to sell an asset or paid to transfer a liability. ASC 820 sets up a hierarchy for valuing these assets, with level 1 being the most reliable because it relies on quoted prices found in active markets. Chase Packaging holds some assets like treasury bills and money market funds, which are classified as level 1 assets. This means their value is based on quoted prices. The company is committed to paying the Chief Financial Officer an annual salary of $17,000. This gives you a sense of the scale of operations compared to the salaries of a CFO at a larger, more profitable corporation. This is quite modest. Finally, the company states that it has evaluated all the events from the end of June until the release of this report and has not found anything of note. In this section, the company's management is required to discuss the company's performance. Operating expenses increased by $4,930 for the 3 months ended June 30, 2025, as compared to the 3 months ended June 30, 2024. The increase was related to the increase in other general and administrative expenses, offset by a decrease in legal and professional fees for the 3 months ended June 30, 2025. Now let's step back and look at the big picture. Chase Packaging Corporation, based on these numbers, appears to be gliding along with minimal activity. Its existing cash and investment holdings will definitely get them through the next year at least, but that cash balance slowly dwindling. The modest CFO salary says a lot about the company's scale. One of the company's strategies includes seeking a merger or acquisition. Whether they can pull that off and revitalize things remains to be seen. Alright, that's our breakdown of Chase Packaging's second quarter filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.